Probably helps if I unmute my microphone. Sorry about that, everyone. I had a little bit of technical difficulties. I'm still working on migrating everything over to my new PC. So I'm streaming from my laptop today, which I haven't done in a while. And it is obviously causing some hiccups here, but hopefully everyone can figure it out, get on this new link, and we can get going. So welcome back to another Metals with Mayne stream. Going to be covering the usual suspects today: gold, silver, dollar index. I do think we're gearing up for a rather big move on the dollar index. So definitely something I want to be watching for, as I think we might be having an opportunity for a swing trade coming up here in the very near future on metals, which would be awesome. My favorite kind of trades are ones that I can get in relatively nice and tight entry, but with a high time frame target, one that I can let run. I don't really need to babysit or monitor too much, and I think we might be gearing up for one of those, which would be bearish for BTC if it happens the way I think it's going to happen. But we'll cover all of that. Obviously, before I start here, as usual, nothing that I share here is considered financial advice. Always do your own research. So with that being said, let's get into it. This is our 4th or 5th episode now. I don't even know. What's awesome is seeing a lot of people looking at the dollar index chart. On Twitter, I'm seeing a ton more people starting to look at the dollar index and then, use that as added confluence when they're looking at their Bitcoin trades or whatever they're trading, whether they're trading, dollar CAD, the Euro USD, whatever. The dollar index is relevant for Bitcoin, gold, silver, all of those other things I just mentioned. So it's great to see people adding that kind of, tool to their tool belt in terms of their technical analysis and just confluence that they're looking for before they enter a position. If you come from a Forex background, this is something that's standard for you. Looking at the dollar index is just part of what you do for analysis, right? So bullish, bearish on the dollar is going to give you, potential bias or directional bias for, some pairs that involve the dollar. It's not a one-to-one inverse correlation always, but it's definitely existent, right? So, I mean, if dollar index is at resistance, gold is at support, there could be a long opportunity there. So, getting right into it, we're going to keep this video right in around 30 minutes. Is going to look at the dollar here. So things have been moving pretty slow. I actually haven't really taken a trade on gold or silver since the last video. I didn't take any trades this week because just looking at the H4 here on gold, we had talked about, let's look at the H12, sorry. We had talked about reclaiming this level, right, being a potential long, right? So, I mean, arguably you could say that this is a long, but when I see gold at support, so what I want to see for a long here, right? Because my risk on the H12, just on the H12, so not looking at the low time frame. Let's say I were to enter this on the H12, my risk is either going right under here, right, or it's going down here. Okay, so I mean, this is a very loose stop. That's an extremely loose stop. This is quite a loose stop here, right? This is a decently tight stop, and the high time frame objective would be here. So let's just whip out an RR here real quick. So if we're going to say, okay, I'm entering here. What am I doing here? I'm entering here. I'm targeting here. Just to get a quick RR here. Right. Entry. So on the tight stop, we're looking at about a 5R right there. On the looser stop, right, we're looking at not even 2R, right? So that's if my entry is right at the top of this block here. But what I want to see in confluence of the SR flip here, right, is I want to see the dollar at resistance. Because if the dollar's at resistance and we are now SR flipping this 12-hour level over here, right, and I'm looking to get long, what I want to see is the dollar at resistance. And that's the reason why I'm not in this trade right now, because to me, dollar wick down here, okay? So initially when this happened, I believe this was yesterday. It might have been the day before. I believe it was yesterday though. When this wicked down here, right, everyone was like, oh, dollar's looking like shit. If it would have closed down here and then been retesting this bearishly, this is a long all day, right? Because the dollar's at resistance now, right? It broke down, it's retesting, expecting it to go lower. This is a long all day, targeting at the very least here, right? With either of those setups I showed you. But the dollar ended up closing quite strong. As you can see here, there's that big wick down and then closed back above that block there, right? And if I want to even draw a new block on here, you could argue that this is where it found support, right in here, right in this order block here, okay? But it closed back above support, right? So that's not really ideal for the bearish dollar. To me, this is actually quite bullish on the dollar and makes me think we're going to actually break higher. But I'll get into that in a second. And obviously, the correlation right now is so strong. As you can see, we had a wick down here, right? And then on this, we had a wick to the upside, right? So I mean, complete inverse correlation there. So the reason I didn't take that long is for that exact reason, right? The dollar, if it was at that gray block, broke down and was here, right? This is a good long. But since it wicked above here and this ended up just being a wick down below, the long doesn't make sense to me. I'm actually thinking, okay, looking at this, we have an H4 or an H12 swing high here. We've basically ran all of this shit, right up into this block. So we've ran all of these highs, closed below. To me, this looks like the more likely move now with a stop above here. This looks like the likely move for me on gold, right? And if I'm going to just delete all my levels here, right? But you can see what I'm doing here, right? So we basically have kind of like a SFP basically, right? Stab above level, close below, another stab, close below. Dollar looking bullish, right? Came below support, back above it, held support. So if the dollar comes up here, right? Retest that, and then breaks above here, we're going to here at the very least, and then I'm looking to short gold like this with my stop above here. Okay, and the same goes with silver essentially. Okay, like I want to be bullish on metals, right? But the dollar is running the show. The correlation, that wick, same wick right here. I just showed you on gold, same wick to the upside here on silver. The correlation is so strong right now, and the dollar to me is setting up to be bullish. So on gold, or on similar kind of idea, right? If we lose these lows here, right? So this could be a deviation. This is your bottom, you know, your support level. And if we lose this low, right, and the dollar breaks up, you know, your very easy risk is right above this high. Okay, this is an H12 setup, right? So I talked about this being a swing trade because this is going to be a trade that has high time frame targets, right? So if we're looking at you know, where you're entering here, where your stop goes, right? So entering here, stop up here, right? We're looking at, you know, maybe a 2.5 R to just this first target here, you know, a 4.5 R to that target there. Similar to gold, right? So if we look at gold, high time frame draw and price is way the fuck down there. There's a lot of inefficiency in this move up. If I just delete all of my levels here, right, and I just draw a level like this, what does this look like to you? What does this look like to you? To me, this cooks, unfortunately, kind of similar to Bitcoin at 6K, right? The bouncing ball meme, right? The bounces are getting weaker and weaker and weaker, and then eventually it eats shit, right? And that's not what you want to see. Obviously, if you're a gold bull or a metals bull, I'm still of the mindset that overall high time frame, we do head higher, but we've been on a serious run, right? On Bitcoin, we've been on a serious run, and on metals, we've been on a serious run. If you look at basically the entirety of 2020, you know, outside of this pullback here, which is at Corona, this has been going straight up. This is extremely vertical, right? And the same goes for Bitcoin, and then the dollar for the entirety of 2020 outside of Corona, right, has been going straight down. So it would not be crazy to think that we have some sort of mean reversion happening on gold and silver, on Bitcoin, which is just essentially a larger correction, a pullback after, you know, like a parabolic move, and some relief on the dollar. Like I said, the dollar could pump all the way up to here, right? And then just place a lower high, right? And then continue to look like shit. So I'm not saying that the dollar is going back to 100. But the dollar could get some relief here as it's been extremely oversold for the better part of the last 5 months. So we have to be aware of the bear case. So when you're trading, the nice thing that I like about trading things like gold and silver, as opposed to trading crypto, is it's a lot easier for me to be unbiased, because when you're trading crypto, if you own Bitcoin, you naturally have a bull bias. Even if you are trying your best to be objective, you naturally, subconsciously or consciously, whether you want to believe it or not, you have a bullish bias for Bitcoin to go up. Because if you own Bitcoin and it goes down, you're losing money. Even if you're not in a trade, you're losing value in your account because the asset that you hold is decreasing in price. Just like when you're 100% tethered up and you're looking at Bitcoin, there's gonna be a little bit, and like, I mean, I'm talking for the average trader here. I mean, obviously, if you're some fucking god, maybe you are completely objective and you have just zero. I've been doing this for 7 years, and I still know when I'm fully in tether. Of course, I'm looking for bearish cases for Bitcoin. I want to buy it cheaper. It's a lot harder to look for bull cases when you're sitting in tether, and vice versa. A lot harder to be bearish when you own a bunch of Bitcoin. So you've got to be aware of that. As long as you're aware of that, you can do your best to counteract it and be like, okay, well, let's imagine this is Bitcoin. Well, if I'm tethered up right now because I think that we're going to see this, I got to have a level in mind, essentially a stop, where it's like, okay, but if it comes back above here, I'm buying back. Because if it comes back above here, that's bullish market structure. I'm buying back because I think it's going to go higher. So you got to think like that when you're trading Bitcoin, right? Or crypto, if you own whatever, spot crypto, spot ETH, whatever. Where the case is not the same when you're trading a commodity. So if you're trading something like gold or like silver, like oil or any Forex pair, generally, I mean, of course, if you're using a site like Prime, you can trade in crypto as your base currency, owning crypto, but you can also have, a stable coin. But for most Forex brokers, or pretty much all Forex brokers, obviously, your base currency is, whatever currency is of your country, whether it's the United States, whether it's Canada, whether it's, the pound. And so it doesn't matter, right? Like gold could go to 3,000 tomorrow and my account balance is the exact same as it was today, right? And gold could go to 1,000 tomorrow and my account balance is the same. Where if Bitcoin has $1,000 move in either direction, it's going to be negatively or positively affecting you depending on what your portfolio makeup is. So that's something that I like about trading commodities, is it makes it easier to be unbiased and objective, because I'm just looking for what's more likely, bull or bear, right? What's more likely, bull or bear? I don't care. I don't care about direction. I don't care about price. I don't own any gold. I mean, that's not true. I own some gold. I own some silver, but it's not an amount that I'm like, oh my God, gold is up $100. Like I'm fucked because I sold my, like, I don't care. It's not an amount that I'm actively trading or anything like that. So for me, direction and value is irrelevant. And that makes it a lot easier to be objective, because I don't care if it goes up or down. I just want to know which is the most likely direction and how can I get in a risk-defined setup that is going to allow me to hopefully, catch the meat of the move. So if you're looking at gold here, right here, right now, right, you're looking at gold here. This looks like the next objective. We're breaking through resistance. What are we expecting? Boom, boom. I want to see the confluence on the dollar, right? Your bias is upside. I'm looking for longs. Dollar was looking bearish. Boom, looking for longs. But then some time passes, right? What the heck is going on here? Time passes. Okay, and now what is the most likely direction on gold, right? Like if you're being honest with yourself, looking at this now, well, okay, we just swept all those highs right into resistance, right? So you got a little breaker here, swept all the highs, closed back below here. Dollar's looking bullish. Objectively, down looks more likely than up. We got weakening bounces, right? We got dollar looking bullish. What happened at the Bitcoin 6K floor? Right? What happened at the Bitcoin 6K floor? Right? Weakening bounces. Okay, you cannot deny that there's some kind of similarity in this PA here. Obviously on different time scales, but price is fractal, so it doesn't matter. Okay, and what was happening to the dollar when Bitcoin was at the 6K floor back in 2018? The dollar was getting bullish, right? And then Bitcoin started a bear market. This is the Bitcoin bear market. The low of the dollar here is like right around January 2018. Right? And the high just a month before. Right? So 1 month before, 4 weeks before Bitcoin topped, right? The dollar, 4 weeks later, the dollar made its low. And then this entire time, the dollar is going up. So you have to pay attention to things like these, but I think it's a little easier to be objective, like I was saying, because at the end of the day, you know, my account is sitting in Canadian dollars or US dollars or whatever. So I don't really care. I was long bias, now I'm short bias. I can flip, right? A real trader is like very fluid with their bias. It's not like, oh, you were bullish, now you're bearish, ha ha ha. That's such a dumb crypto Twitter trope. Anyone who really trades knows that you have to hold your bias very loosely, right? You got to have conviction in your trade idea, but I also know, okay, now that price action has developed more, my bias has changed. So to me, looking at this, looking at what I think is happening with the dollar, which is going to be something like this. Now, I could obviously be wrong. If for any reason the dollar gets back below this gray, we're looking to long gold. Simple as that. But as long as dollar's above this gray, I'm looking to get in a short with the expectation that we eventually gain this level and head into here and fill in some of this inefficient price action and head into here and then potentially even at highest here. So I think if we see the dollar move up from where it is, boom, up to here, I think this is going to be a short that we want to look at on gold next week, right? So I'm expecting the dollar to make a move relatively soon. I've seen a few people post this broadening wedge. Not a pattern that I trade personally. Am I doing this right? So broadening wedge. But guess how you play a broadening wedge? When it breaks out, you long it. So, you know, I believe a broadening wedge like this is a bullish chart pattern. So same idea here. I mean, at the end of the day, all I've done here in reality is I've marked out a range. Right? Deviation, deviation, right? Regain the EQ, take out the range high, close above, find support, we target here. Right? So, you know, this could be your spring if you're a Wyckoff trader. Right? Spring, there's your retest of support. Next leg takes us up. So I'm leaning towards upside on the dollar next week. I'm leading towards this kind of a thing to happen here, okay? Up above here, right? And then ultimately this would be my first target. And this is the short I would be looking at on gold. Stop above that spike, right? This is a 12-hour chart I'm showing it to you on. You could get in on the H4, right? So on the H4, let's say we go here, right? The H4 setup might look like this, right? With your stop above here, and we're breaking below this consolidation here, okay? So a few different ways you can get in. To me, this will be a swing trade, so I don't mind the H12 because really my target is going to be this low here, and then ultimately it's going to be way down here. So if I take out my risk reward tool here, if I'm happy, you know, entering here with a stop here, to here is a 2-to-1, right? And to here is, you know, almost a 4, 3.5, 4 tighter stop, right? The H4 entry, tighter stop. You know, we're now talking about a nice 6R trade that I can enter, and it will take, you know, days to weeks to play out, but it's sitting in the background, it's humming. So that's kind of what I'm looking at on gold and the dollar, and then obviously on silver, something very similar, just with different levels. To me, silver, there's a couple ways you can look at it. you can kind of look at it as it's like a wedge here, a triangle, and you play the breakdown of the trend line, right? I'm not really a trend line trader. Or to me, I think I would rather just wait for it to lose this low, right? Because to me, this is a key level, right? We went below it, but once we regained it, this has been support, right? You can see all the wicks respecting it. So I like this level here, 26.50 essentially, 26.45. So similar to gold, right? Break down, stop could go right up there above that wick, targeting this consolidation first, right? And then targeting much lower down into here. So that is all hinging on the dollar playing out something like this. Okay, and if the dollar gets back below this gray, we flip our bias back to bullish, and I'm looking to get long on gold into these two highs here, and that would be a shift in market structure, right? Because right now this is looking like it's losing steam. But if we are able to, if the dollar does not get bullish and it remains bearish, let's see how far back I'm going to click here just to annoy myself. Let's say the dollar, the dollar remains bearish, right? It dumps back below, right? If we're able to take out this high, okay, you're entering on a pullback, so an SR flip of this area here, or an SR flip of this high, because I think if the dollar remains bearish and we take out this high here, we're going to ultimately go back out and take out this all-time high. So I'm leaning bearish though, and I hope it makes sense why, because this looks like the likely scenario on the dollar to me. I could be wrong, but the stock market is looking bearish, Bitcoin is looking bearish, dollar is looking bullish. So that to me just leads me to believe like the most kind of clear risk-defined setup right now, assuming the dollar goes up next week, is a short on gold and silver. What up, Joe? Tanner, MV, good morning to you. Azam, J-Man. Thanks, question tree. Is fitness is boring? Well, fuck off then. Leave. Don't care. Man's making too much sense. All right, I appreciate that question. Isn't an SFP in a broadening wedge showing bearishness, or is it more of a megaphone? Oh, the S&P, sorry, not the SFP. Isn't the SFP in a broadening wedge showing bearishness? Well, that's exactly what I just said, is it not? Right? I said the S&P is looking bearish. I'm thinking that the stock market is looking bearish. So, like if you look at this, right, that's a pretty ugly 3-day candle, right? Like this is a swing high right here because we've got a lower high on each side. So that's a swing high. So this looks bearish to me, right? I'm thinking it's more likely that we come in and test 3,200 on the S&P. Right, so if I draw that high out right there, see how nice that level is, right? So boom, support, resistance, resistance, support, right? So to me, this looks like the drawn price on the S&P. I'm bearish on S&P, right? Which would be confluent with what I was saying. So I'm not sure I fully understand your question. Isn't the S&P in a broadening wedge showing bearishness, or is it more of a megaphone? I think I might know what you're talking about. I've seen some people draw, like, I don't know. I'm going to butcher this, but I've seen some people draw something kind of like this, right? So yeah, this is, I don't know, I guess called a megaphone. I'm not of the mindset that we go down here. Like, I don't know if people are saying, okay, we've now tested the top, we've tested, but now we're going to go here. I don't think that happens. I think this low is fucking in. I think that low is rock solid. But I wouldn't be surprised if we come back and test, maybe the midpoint or something. Yeah, I guess this could be called a megaphone. I don't know if the pattern I said on gold was right, if it's called a broadening wedge or not. I've just seen a couple people talk about it. To me, what is shaping up on gold is bullish, and what is shaping up on the S&P is bearish. Target, please. I think I just gave you a bunch of targets, bro. What are you talking about? Short target on gold will be the high 1800s. Short target on silver will be like $24, right into here, 24ish. Short target on the S&P is like 32.30, assuming bearishness. You're welcome, Rasik. Happy to do it. You're saying broadening wedge was bullish when you're talking the 12-hour gold chart. That's true. Yeah, sorry. No, maybe I confused myself with the terminology there. But yeah, I'm medium term bearish on the S&P. I'm bullish on the dollar, and I'm looking at gold and silver as potentially bearish. Again, this all hinges on the dollar. The correlation is so strong right now that this is what you need to be charting. Rather than charting these two separately, chart this out. Make a plan. Are you bullish or bearish here and why? And then go and find the confluent setup here, right? So if gold breaks up here and then is finding support at this level, I want to find resistance on gold to sell into. That's going to be the high probability move. Same thing on silver. It is going to be a battle between Toronto and Boston. Game 7 wasn't even fun to watch. I was just sweaty and nervous for 3 hours. So, Washik has a question. Wasik, sorry if I'm pronouncing you wrong. Name wrong. I have a question. What would you consider a higher high or a higher low? Would it be the wick above the previous higher low or a close above the previous higher low? Getting many contradicting answers. So, a really good example of this was actually on Bitcoin. What the hell chart is this? BitPay. It's here. So, is the higher high here, right? Or is it here? So we closed above the candle bodies here, right? But we did not make a higher high above the wick. So people trade this differently. My advice with this kind of stuff is always be consistent. So some people ask me, do you use the wicks in order blocks or not? Do you, do you pull the fib from the candle bodies or from the candle wicks? I think that these little tweaks, because they usually don't make that much of a difference, are up for interpretation. But whatever you do it the same every time. So if you're going to use the wicks on your order blocks, use the wicks every time. If you're not, don't use them every time. That way your strategy and the data you collect is consistent. And then when you make analysis, tweaks to your strategy, to your edge based on the data you've journaled and collected, it's actually relevant because the way that you've been doing things has been constant. If you're changing how you mark levels constantly, right, you're not going to have very good data because it's going to be there's going to be different circumstances. You got to have certain things constant. As for the wicks, high or low, I'm someone who uses the wick. So to me, we never made a higher high here. So even though we closed above the bodies here, to me, we never made a higher high. And that's why the SFP thing, right? So we made a higher high here, right? We wicked above the previous high, but we closed below. So that's a swing failure pattern, right? So here, same thing. We made a higher high, but we closed below, so it's an SFP, right? So I'm someone who uses the wicks. And so that's what I'm consistent with. If you want to use the bodies, you can use them every time, and occasionally the bodies will work, right? And they might work differently. Like in this instance, you would have got screwed, right? Because you'd be like, oh, higher high above here, I'm bullish, and then we obviously nuked. So just be consistent with what you do, and then do the same thing every time. But to me, it's the wicks, right? So this was never a higher high, right? Even though we closed above the body here in this area. Hopefully that answers your question. So I had a good start to the week, and then today I just took a fat L trading NASDAQ. I woke up at like 5 a.m., blasted into a trade, and just got smoked. So Joe wants to know, are FX USD pairs always that strongly correlated to DXY like right now? So yeah, absolutely. I mean, again, it's never going to be a one-to-one correlation. It's never going to be every time this goes up, this goes down. But if you're trading Euro USD, right? Well, look at Euro USD this entire year. What's the dollar been doing? Right? So you tell me, Joe, are they correlated? The answer is yes. Look at how correlated they are. This area here, right, is the inverse of this. Right? This little pullback here, where'd that happen? Where did that, shut up, Siri. This little pullback here, see that, June 22nd? Look on the other chart there, right there. So that high is basically bang on that low, right? So they're absolutely correlated, and you do want to use them when you're looking at your trades, right? So if I'm saying, okay, well, the dollar is at support here, or let's say the dollar is at support here, right? On September 11th, earlier today, we go over here. If we find the same time, look at what's this is at, resistance. So that's clean as hell, right? So the dollar comes into support here, right? Boom. And we're expecting this support to hold. What happens on Euro USD? It comes right into resistance. So this is a high probability short, right? Shorting the euro here, right now might make sense, right? It might be a decent short because it might continue. But there's extra confluence here because the dollar was at support, this was at resistance. So this exact thing I just showed you, this is exactly how you want to apply it to gold and silver, right? When this is at support and gold is at resistance, if this is bullish, right, you want to be looking for a short. You want to be shorting it at resistance, right? So that's a perfect example there, right? Boom into support, right into resistance at the exact same time. This happened at the same time. So hopefully that helps. Can you run us through how you draw your levels? That'll have to be for another video. We're already getting over the 30-minute mark here. And so the purpose of this stream specifically is just to cover kind of metals. So gold, silver, and then obviously the dollar index. I will be starting to do just kind of more streams. I'm trying to get back into kind of a more regular schedule. I really do enjoy doing these. It's been summer, right? So I've been enjoying going outside and stuff. But definitely we'll do another video, MV, where I can go into that in more detail. I do have a bunch of educational videos that I've recorded over the last years. Maybe I'll start releasing some of those, but I also have a ton of videos on this channel. If you go back and you watch some of my old streams, some of my old videos, I go over how to draw levels, how to draw order blocks, how to enter trades at order blocks. So definitely go and watch some of my old stuff. I do that, but I will be releasing some more stuff in the future, just not today. All right, thanks for the message, Scott. Appreciate your message. Appreciate you tuning in. Tanner, really appreciate the time you take to make these. Yeah, I like the 30-minute video. If you guys have been following me for a long time, I'm kind of a rambler, so sometimes I do these 2-hour-long videos, and those are really hard for people to get through. And there might be some good content in there, but there's also a bunch of BS in between. So trying to keep these short and quick. So thanks for tuning in. I hope you enjoy your weekend as well. I'm going to sign off. I'll be back on Sunday. I'll be doing an Ethereum stream Sunday at 5 p.m. Pacific Standard Time, 8 p.m. Eastern Standard Time. So make sure to tune into that one. Everyone have a good weekend. Let's go Raptors. We'll talk to you soon.